Hey everyone, welcome and thanks for joining us today for a very timely discussion about what we can expect from Bitcoin and other crypto assets in the coming months and even beyond that. So there's certainly some debate, I think, among investors about how to view Bitcoin, whether it's a long-term digital gold store of value, hedge against certain risks, or even something else. But I think what probably can't be argued is that crypto and Bitcoin specifically is becoming a much more relevant part of the macroeconomic discussions and considerations for investors. So this relevancy, if you will, is certainly heating up with today's FOMC meeting this afternoon. The U.S. elections are, I think we're now under 7 weeks from the November 5th elections. So today, what we'd like to do is focus on three areas, and they're big areas, but we'll try to keep the conversation as focused as possible. And that is the impact of this afternoon's presumed rate cuts, I should say, geopolitical events, potential escalations on that front, and how that will impact Bitcoin and crypto. And of course, we'll get into a little bit of the U.S. elections and the impact there as well. We have two guests today that certainly spend their days, and I'm sure oftentimes their nights, thinking about these issues. Bruno Sousa is the head of US and Europe here at Hashdex, and Geoff Kendrick is the global head of digital assets research at Standard Chartered. So we'll get started here in a minute. I do want to just very quickly hit a couple administrative items. First, I should say that this webinar is for educational purposes only. So for any product-specific information, please refer to the appropriate prospectus. And I do also want to highlight that we want to have a lot of questions, and I'm sure we will have a lot of questions. So feel free to send those along at any point during the webinar. And we're going to keep this to 45 minutes. And I'd like to save maybe 10 to 15 minutes for questions at the end, if possible. So please feel free to send along your questions whenever you can. So let's go ahead and get started. I think, Geoff, Standard Chartered has been one of the first large traditional institutions with major initiatives in this space. Can you just, to kind of level set, tell us a little bit about your role and your team, who you serve, as well as some of the initiatives, the digital asset initiatives at Standard Chartered?
Absolutely. Thanks, Jerry, and thanks everyone for listening in today. Yeah, you're right. So Standard Chartered has been at the forefront of this space for a number of years now. We just last week announced our custody offering in-house, which we're going to run out of the Middle East. We have a trading offering in BTC and ETH also coming in-house, and we've had an association with a majority-owned company called Zodia Markets also for the past couple of years as well, and they're making markets in spot, BTC, ETH, and a number of other major digital assets. So it's fair to say we have taken this industry very, very seriously. We see it as a future of finance proposition, and that's come from the top, from CEO Bill Winters for the past number of years. So long as Bill remains in seat, it's fair to say that the bank will continue to push in this direction. And now that the industry or the asset class has matured as much as it has so far, it's fair to say we think that digital assets are here to stay, and Standard Chartered as an organization is certainly here to stay and to take advantage of this opportunity set as it goes forward and help guide our customers through that going forward. So the customer base there is the traditional customer set, traditional investors, be them real money or leveraged accounts. We have very close relationships with all of those accounts that people would be familiar with. It's corporates who want to do something in this space. It becomes retail via our wealth management arm as well. So it does feed into a lot of pies globally, if you like. And as I say, our bank is here to stay in this asset class.
That's great. And Bruno, maybe just before we get into kind of all the big picture questions, I know you've been around Hashdex since the early days, nearly 7 years ago. How has the entrance of firms like Standard Chartered and other traditional financial institutions like that helped improve the infrastructure for ETPs, particularly just in the last few years?
Yeah, it was interesting. I mean, when we started and launched the first funds, and actually started the company because of that, is precisely the lack of infrastructure that was there in the markets, you know, as a whole. Even for retail investors, you had very few good options to have, you know, exposure to the asset class and so on and so forth. And in the fund space, even more so in the regulated fund or, you know, structured products, ETFs, there was not much there. It was pretty much a desert. We knew inevitably we would see the industry come together and coalesce around, and by the industry I mean the traditional financial industry, around digital assets as something that's something, you know, important part of the future of finance, as Geoff said. Of course, we had some early movers in that space, Standard Chartered being one of those good guys coming in with a long-term commitment. I would add Fidelity and, you know, a couple of others that have been involved in the space for a long time. Recently, we've seen some entrants with different degrees of you know, appreciation for the space and what it means. I think we tend to separate. I at least tend to do that a little bit between those who are really committed to the sector and those who are tourists. And we've seen that over and over again. Sometimes you'll see a large bank coming in with an offering and they drop it after 6 months, 12 months. And I think this is a normal part of it that really benefits the end investors in the end. It's you know, things that were taken for granted in the traditional fund management space and didn't exist in crypto. Now we have plenty of options from funds and ETFs, and also everything that the client doesn't see, which is what happens in fund administration, custody, you know, accounting, everything. It's you know, the boring part of managing funds, so that the clients can have what matters, which in the end is exposure to the assets themselves, right? So it's I'd say this is everything is as running as expected in that front. And with, you know, good sides and bad sides for us as a company, that competition gets harder, but also you have more possibilities that you didn't have in the past, because this is seen now as a normal asset to some extent. And I think we'll get to into that a little bit more deeper in the conversation.
Awesome. That's good context. And with that, I think we can kind of move to the 800-pound gorilla in the room. There might be multiple 800-pound gorillas in the room at this point, but with regards to the FOMC meeting today, Geoff, obviously the expectation is for a rate cut. We don't know if it'll be 25 basis points or more. Equity markets hitting highs yesterday, you know, potentially in anticipation of this. How is this going to impact Bitcoin and other crypto assets, both in the near term, and then kind of looking out more broadly if we're shifting to a looser monetary policy? How are you all looking at the impact to crypto?
Absolutely. So it clearly matters. So the market's focused on most likely 50 basis points in a few hours from now. The key for me is what the yield curve does when we think about what this means for Bitcoin and digital assets more broadly. So if and now we've finally gone just positive territory on the 2s, 10s in the US in the last week or so, having been in inverted territory for a number of quarters. And so if we steepen post-meeting this evening, particularly post the presser from Powell, I'll take that as a positive input, number one. Secondarily, within the components within treasuries, I like to split out break-evens versus real interest rates, so inflation expectations versus what real interest rates are doing. And if you see break-evens go higher compared to real interest rates, so if that spread moves in the direction of break-evens, that would also be a positive sign for me, certainly in the sort of back end of the yield curve. And also if you price in more rate cuts down the track, and or if term premium goes up, so on that measure as well. So within the components of treasury yields, I think you can get a good gauge as to what this should mean. My expectation going in would be if they do 50 and the Powell presser is dovish, which obviously the market's already pricing a lot of cuts, you probably see a little bit of positivity on each of those measures. And for that for me, you probably see us sort of establish a new beachhead, if you like, above the 60,000 level that Bitcoin's been struggling with the last few days. And if we can do that, then we start to move forward and think about the other bigger picture drivers like geopolitics, US election, etc. So for me tonight, that yield curve movement, particularly the shape, will be key to watch.
I know you covered some of this in your recent paper, Rise of the Phoenix, talking about Bitcoin, and relatedly, in terms of the performance of Bitcoin so far this year, would you say that it's been disappointing? Coming in the sort of heat of the Bitcoin ETFs, I think some people were anticipating that we'd be well over 100K at this point. How do you evaluate Bitcoin's performance specifically this year, knowing that the environment may be changing here very shortly?
Sure. The last few months have been a little disappointing. I think it's probably fair to choose that word. ETF inflows since early July have been flat in total. You had obviously the big inflows in Q1 in particular. The components, like those who own them, has been pretty positive as well. There's a lot of institutional money now and sort of big picture, TradFi players involved. So I would have expected we would have gone a little further than we have so far. Part of that, I think, is that the all-time high came before the halving. And so that's thrown out the halving, like the normal halving cycles. So one of the key drivers of outperformance post-halving in previous cycles was that the amount of exahash in the system typically goes down post-halving, because for miners it's less profitable. So you see some consolidation or at least a slowdown in investment. So either in first or second derivative terms, that exahash normally goes down. Now, this year's cycle is much more like 2016 halving, where the hash rate continued to go either sideways or upwards for the first 6 months post-halving. Probably that's this time because of the ETF inflow that pushed prices higher before the April halving. And then as a result of all of that, you didn't have any consolidation around the halving that we've had before. So those that were hoping the halving would help would probably say the last few months have been a little bit disappointing. So I think that helps explain what's happened. And then we probably need that next driver, which obviously we're going to talk about around US elections, etc.
That's great. I think maybe just one more kind of follow-up, because I know this was something else you had mentioned in your paper, and mentioned earlier too, but the kind of treasury market developments and how you see that impacting Bitcoin. And then Bruno, I want to ask you too about some things outside of kind of monetary policy and fiscal policy things.
Yeah, so I mean, it's absolutely positive that we're moving into a cutting cycle with the Fed finally catching up, right? So whether the Fed is ahead of the curve or behind the curve, I guess, is where my previous comment was going in terms of what this means for treasury markets. If the market takeaway tonight is that the Fed is committed to getting ahead of the curve, then that'll be positive. That'll be yield curve slope positive. So 2s10s will steepen up a little bit more than where we are. That'll be positive for risk assets like digital assets. Positive for things that like there to be a bit more liquidity in the system as well. And so again, that sort of story is the one that we're hoping for Bitcoin this evening.
And Bruno, I know there's obviously many geopolitical events happening in the world, escalations, Middle East, Europe, Asia, across the globe. So obviously Bitcoin and crypto is not immune to any of this. So I'd love to get your thoughts around some of those type of macro factors that could impact the investment case for Bitcoin and other digital assets, both in the short term, and how you think about it over the longer term.
Yeah, I think in the key thing in the short term, and there are a number of ways we could go about this and talking about things that are a little bit minor, like regulation. Like you can see regulation as something that was front and center for so many years, but I think it's really developed now in the sense that it doesn't really affect the investment case. Two things on the completely other end, which is the zeitgeist and people not really trusting institutions, and how this fuels the narrative of Bitcoin, and things like Silicon Valley Bank going down, and you're seeing Bitcoin going up, just because US investors suddenly realize that yes, banking's they go bust. But I think that the big factor that exists is a war, especially Ukraine, Russia. I think even more than the Middle East, given the implications in NATO and so on and so forth. And everything hinges a little bit on that. I think everything is going to happen in all markets. And I'm struck a little bit, by looking at the coverage from the US media, for instance, which I think is very different from the things that we hear in the street here in London or just in Europe as a whole. I think given the memory of Europeans around war and what it means, how casual the treatment of the possibility of full-blown war with Russia has been in some corners of US media and analysts and just the US public in general, which tend to be, I'd say, pay less attention to foreign policy than some other regions. And what happens there? I mean, it's that it can go very bad. I think it's we shouldn't discard the possibility of having something full blown. And it's amazing that this isn't in the center of every conversation that we're having right now, given how sensitive things are, right? If it happens, then all bets are off in terms of what happens to the assets. If we go into NATO war with Russia and more open, really war, we've been seeing a proxy war to some extent. What does it mean for risk assets in general and Bitcoin in particular? So I think then you can start playing scenarios. You can imagine central banks needing to print money and what that happens. You can think about people just being flocking to things that don't necessarily depend on fiat, and that would be gold, Bitcoin, commodities in general. I think this is a key one. But whichever scenario you want to play, Bitcoin has a space in it. In my personal opinion, is that although short-term shocks to price should be expected, I think if you have an event like that, in the medium term, I would expect Bitcoin especially to appreciate. But yeah, I think it's for me this occupies an unhealthy portion of my time is thinking about the background and what's happening here, and that of course connects a lot with the U.S. elections too.
Yeah, absolutely. And I think you obviously have a lot of conversations with investors, in Europe and around the world. So I want to ask you kind of a two-part question. One, what kind of questions are you getting from those investors now, given kind of the macro landscape? Are they changing? Are they the same? Are they different for Bitcoin and other crypto assets? And so I'll leave it there, and then we'll get into I'm holding off on the U.S. election discussion because that'll be we'll save that for the end. So maybe if you just want to address that for now, and we can get into the U.S. elections momentarily.
Yeah. We talk to investors globally, right? So I think we have a very good sense of what's happening. And when you take out, let's say, the particular local biases and the way the financial industry works in a different country or not, there are some patterns. I think Switzerland's a very good reference in this, just because wealth managers there are managing money for investors from all over the world. So they need to respond pragmatically to different cultures and different requests coming from high net worth, ultra high net worth clients and corporates. And they've been very pragmatic about crypto since the early days. So that means that they understand the asset class more. And I think they're a good reference. What happens there tends to be replicated in some other places. There are a couple of things. So first, the US ETF really took out some of the questions, especially around Bitcoin and ETH. The questions being, is this here, for the long run? I think this question is settled. So it's a lot easier. You don't have to explain the investment case for Bitcoin. I'd say most professional money managers today should understand at least the basics of the case being made for Bitcoin and ETH. And then, of course, layer one, smart contract platforms, then you start depending a little bit more on their knowledge. But I say the narratives around Bitcoin doing this thing and digital gold and so on and so forth, that's very understood. And smart contracts, tokenization, that's also very understood, right? And valued. I'd say that they acknowledge that this is important. These are important theses. They make sense, and there's value to it. I think what's been holding people back and connecting with what Geoff said about the disappointment is that people are jittery. I'd say this is there's a feeling that something's coming, and they can't really pinpoint it, but it's not a risk on environment for most of these managers, right? And so they're doing some tactical things, tactical trades, even in Bitcoin sometimes, and or crypto more broadly. But it has been very much a Bitcoin ETH market for a few months. It's and also I put these two very separate in a bucket because the rest is all still seen as very, very alternative. Even if you're bringing bigger assets like Solana, Chainlink, and some of the bigger ones, this is still very much stage one of selling, of explaining what these assets are. But Bitcoin and ETH, they tend to be in their minds, and there's still anything that's a little bit more risky, they're still concerned. We had a dress rehearsal a little bit on the yen trade day there that some people thought, oh, this is the event is coming, the event that they can't really explain what they think is going to happen, but there is some feeling that something's going to happen, so they've been more comfortable. They've been uncomfortable in taking more risk, and this doesn't affect just this crypto. This affects anything that's a little bit more risky. I think with the macro changing a little bit, and some of the things that Geoff pointed in the rise of the Phoenix, which is, I love the paper, I think it's great, pointing that the macro factors have been there for some time and they're consolidating, and people should start reacting to them. They haven't reacted as fast as maybe expected, but they should start reacting to them. These are all very positive headwinds for crypto in general, but for Bitcoin specifically.
Speaking of headwinds, potential tailwinds, I think maybe we can shift to the U.S. election now. Whatever, 50 some days away, or less than 50 days away at this point. Geoff, so how impactful are you all looking at this election? What's the impact that you think it will actually have on the asset class? And again, I might sound redundant here, but interested in kind of both the short-term impact as well as looking out over 3, 5, or more years.
Yeah, cool. So the outcome clearly matters in the near term, right? So, I mean, former President Trump has made it very clear he's going to be proactively positive on the asset class, right? So, and having had President Biden being proactively negative, that'd be a huge swing from where we've been, right? So President Biden vetoed the SAB 121 repeal attempt that went through the House and the Senate in May. And so, look, if we're looking at a Biden 2.0 rather than a Harris, which I'll come to in a sec, the chances are in that scenario, the Democratic Party could remain very, very negative if it was a Biden running again in November. So thankfully that's off the table. Yeah? So we're now left with what I phrase as either proactively positive, which is Trump, or let's say not proactively negative, which is how I would see a president-elect and then President Harris. I think since Biden vetoed SAB 121 repeal in May, the whole issue and asset class has become even more politically sensitive in the US, but to a degree now where if Harris were to backtrack and become as negative as Biden if she was in the White House, it would be quite negative for her politically. So a little bit of a political own goal now. So I can't really see her allowing the Democratic Party go quite in that direction. Yeah. So as a result of that, in my note, the reference from last week, I suggested that by the end of this year, we'll print a fresh all-time high no matter what. In the Trump case, 125,000, and that's because I think the market price is in a relatively quick positive story on regulatory changes at the head of the SEC, future ETFs for the industry more broadly. Under Harris, I think it's a you'll have a negative impact at first, but I'd be buying the dips on those because I suspect President Harris won't be as negative as the market may fear. Yeah, so that gets me to the 75K by the end of this year. Next year, I think SAB 121 goes in either scenario personally, and the regulatory landscape in the US more broadly does improve next year. You get changes at the head of the SEC. You already had a pullback last week from the SEC around the securities definition that had previously been used against quite a lot of this asset class. So I think the mood is changing no matter who's in the White House. And so by the end of next year, I'd expect a number of those changes to happen just probably earlier under Trump and later under Harris. So I'm looking at 200,000 for Bitcoin by the end of 2024, end of 2025. And possibly around then you start to hit that kind of medium term direction, which is, I think, where we need to go, which is in terms of percentage of assets, you end up being something like a gold versus BTC basket starts to look a little bit more normal, like 80% gold, 20% BTC in terms of once you get to those sort of prices. And that seems much more sensible. And also the overall ETF market, which obviously is where you guys are involved in particular, is probably by then will have matured to a degree. So I previously used the example of the gold ETF in the US from 2004. That took about 5 or 6 years to get to maturity. I suspect for BTC, it's more like 2 or 3 years. And so by the time we get to the end of next year, you're starting to get some maturity. You've got significant assets. You know, about $17 billion net have gone in so far. By then, you're probably double or tripled that, right? By the end of next year, you'll end up with more like 1 million BTC. So far, you've had about 300,000 BTC net inflow this year. So by then, you're kind of maturing and you're thinking about this asset class and BTC in particular as having led the maturation of the industry. Yeah. So to summarize that, end of this year, 75 Harris, 125 Trump, end of next year, 200, no matter what.
Bruno, I'll give you the chance to say if you think that's too bullish or too bearish here momentarily. But I know one of the things that we've learned from Brazil in particular is that politicians, this is an asset class that they really can't be ignored, right? Because of the general nature of it. And what do you anticipate in terms of, and feel free to agree or disagree with anything Geoff said here, but in terms of, there's a lot of speculation about what a Trump administration might mean for the asset class, what a Harris administration might mean. And a lot of it is just that speculation because there haven't been a lot of specifics. But what are you anticipating in terms of just the general political embrace or lack of embrace of this technology, you know, in 2025?
Yeah, no, God bless Geoff. You know, if his predictions are there, like it's yeah, that'd be great. We're always because you know we are the managers here of the funds. We're always kind of limited in painting the very bullish scenarios. But from a personal perspective, I think this is something that certainly makes sense. I agree. Trump, of course, brings in the tailwinds and like lots of things can happen in you know in a faster paced environment. And if Kamala comes, then I think there's some reasons for concern. You'll continue seeing, I think probably this attrition war. I think they continue to be anti-crypto in spirit. You're seeing some of the folks that actually were the architects of Choke Point 2.0 being actually promoted in Harris administration. And of course, they'll have bigger fish to fry. You can think, okay, they don't have to pick on a smaller industry to you know to get some attention. They'll be looking at some other things too. But the fact is that this you know ill-advised war against crypto that particularly the Democrats have brought on in the past 4 years, very strange in nature, very un-American in a sense, and you know if you think about it, you know so many of the things that we saw. It's the fact is that you know crypto has been winning. The industry has been winning. If you know you take out you know, despite the enforcement actions, and some of them were necessary and positive, You had bad actors being weeded out just by their own flaws in the past 4 years. You had the greatest scale lawsuit and the ETFs as a major blowback to how the SEC viewed the sector. You had Ether futures coming, and as a consequence, ETF as a consequence, in a way, of the Bitcoin ETFs. So it's, the industry has shown the strength, the asset class has shown the strength, and it has grown despite everything that went, the everything that the blocks that the Democrats are putting there. And I think the confounding thing is why it became such a partisan issue, and so unnecessary that you're throwing a lot of the industry to support the other side for no particular good reason, right? So I agree with Geoff that, irrespective of what happens, the scenario is bullish for crypto. I think it's just more bullish or less bullish, and it's bullish because of the thesis, and the thesis still holds and is still strong and stronger by the day, and the underlying infrastructure for the sector as a whole is a lot stronger today. Of course, you'll probably miss out on some things like on the ETF front if you stay with the policy similar to what we saw up until now. You're limited to Bitcoin ETH and variations on Bitcoin and ETH. So, long, short, leveraged, indices around them, that type of stuff. But you're probably not seeing a Solana, Chainlink, or other ETFs anytime soon if it's Harris. And of course, the US-based crypto companies having to deal with some of the things that, Wells notices and things like that. So it's a drag on the sector, but the assets themselves are still there and will still be doing their thing. So yeah, and then let's see what comes, and hopefully Geoff is right on the predictions. We'll all be happy here from our side if they become true.
Yeah, and I want to ask you too about just ETP and ETF demand. So Geoff spoke earlier about sort of how we've seen recently it's slowing demand for these ETFs. Regardless of who wins in November, what are you thinking about in terms of the demand for these particular products? The Ether ETFs, obviously, they haven't seen the type of demand that the Bitcoin ETFs have. Bitcoin ETFs now have, I think, 5% of the total supply of Bitcoin. Is that the type of, are you anticipating that this is something that's going to kind of take off? And again, I don't know if it's possible to isolate or not include the impact of the election, so feel free to do that if you want. But what do you see happening over the next, call it 3 to 5 years, in terms of the development of ETPs in particular globally?
Yeah, we're talking about disappointment, but make no mistake, these products were a huge success. We're talking about the specific window from July until now, but this was a home run by all accounts. If especially crypto Twitter is an interesting space, and you see almost daily now the Bloomberg guys, Eric Balchunas, James Seyfert, and Nate Rossi, all other guys that really understand ETFs, saying these are all incredible successes, right? We shouldn't lose that of sight. It's been really, I think, outstanding in many ways. What we see globally is that the US took some time, but it caught up, and we've had these ETFs before, of course, in Brazil, which are the first country to have the proper ETFs. In Europe, Brazil and Canada, we had Bermuda as the first, then Canada, then Brazil. That was the sequence. In Europe, you had the ETPs for some time, and also products that could serve the market well. What we saw in many countries, in the UK particularly, you had people holding back and waiting for the SEC to have a position. Once the SEC came through, you saw here in London the ETPs being listed only for professional investors for now, but I think it's inevitable we'll see them for retail too. In Hong Kong, first you had futures based, and then the spots. Australia's there. If you take the top 20 exchanges globally, it's only, I'd say today, mainland China, Tokyo, Seoul, and India, the ones that are out. But other than that, you have everything. You have Europe almost entirely, You have the US, you have Canada, you have Brazil, you have Australia, you have Hong Kong. So there's not much left. And that means that, this was, which was, let's say, kind of a secret that we had when we started the company, which is crypto ETFs are important and will be a thing. This is very well known now. And it's, we see the ETFs as just one extra important tool in the toolkit for investors to have an investment strategy in the asset class. And we tend to talk about ETFs, ETPs a lot, but you have structured products and normal funds, and there's still so many avenues that are not completely explored. UCITS funds are a good example for those not familiar with it. These are the main vehicles in Europe for investments, and where you can concentrate the bigger capital pools. You don't have UCITS ETFs now of 100% crypto or direct exposure to crypto. So there's still a long way to go, and this will happen. I think there's a lot of space for that to happen. This year in particular, we saw Brazil growing a lot, great inflows there in that slipstream of the US ETFs. We saw Canada losing AUM that was expected, given that they had a lot of US capital invested in those products. And in Europe, the net number is actually negative this year, but because we saw something like 700 million going from a couple of issuers into the US. So these were major hedge funds doing the basis trade and just going to very liquid and cheaper products in the US. But if you take out that element, there were positive flows too. It's it's the one thing that's important to add is that it's been smaller than maybe some people expected, because a lot, and I'd say maybe the majority of these investors, they react to when the all-time high breaks. We've seen this time and time again. So when we have a run from 75 to 100, then we're going to see real FOMO, and then we're going to see a lot of action because it's amazing how you can still go back to very knowledgeable people and say, yes, this is happening, this is good, it's important. Say, I don't know, maybe you'll go down back to 40 and trade this. The psychological element of the all-time high is very strong. So once you break it and you go into uncharted waters, then you see people, really reacting. And the thing of buying when it's, it's cheap, when it's low, and selling when it's high. I think to the listeners that are not professional money managers, if it's to your comfort, it happens with the best in the world. I think some of the best managers in the world, they still get stuck. We're all human beings in the end. We're limited by our biases, and it's the hardest thing to do, actually, buying when it's low and selling when it's high. So if you lose some money doing that, that's just a part. The important thing is not breaking in the long run. I think that's a key thing, right?
That's we have, I think, about 7 minutes or so left, and we've got a bunch of questions, and one of them, I think, piggybacks perfectly off of what you were just talking about, Bruno. A question for Geoff. Bruno, you mentioned the UCITS, and the question is, Geoff, outside the US, do you expect the UK or Europe to improve from a regulatory or institutional adoption perspective when it comes to crypto ETFs? Do you expect them to improve anytime soon?
So I can definitely say that the institutional demand is here. It has been for a number of years now. Unfortunately, regulators in the UK have been very slow. I mean, we all know the frustrations in the US. In the UK, there's been almost nothing really has happened. So the FCA has been slow. Bank of England keeps sending out papers and asking for comments on the broader industry, with a couple of hats like around central bank digital assets and other, but the regulators have been very, very slow here. So realistically, for the UK to change more positively, we probably need the US to change, and then the UK will follow, which is a shame, but I think that's where we are. In Europe, obviously, we have MiCA now, have for a while. It's a pretty good step in the right direction, but there's still more change required. So ideally, for those of us in London or this time zone more broadly, you would see some sort of proactivity, but unfortunately looks unlikely right now. So as a result of that, a lot of this industry is shifting to Middle East for obvious reasons. And, given the size of the US market, it's difficult to see the US not continuing to dominate this down the track, particularly if you get a change in administrative stance next year.
We have a question about the Bitcoin as a strategic reserve asset idea that, of course, came up when Trump spoke to the Bitcoin conference a few months ago. Question is, if Trump were to get elected, how likely is this to actually be implemented? So if you want to maybe tackle that, Geoff, I'm sure you have your thoughts as well.
Yeah, the implementation is hard. So I can start with that. So I don't think this is something that happens in the short term. If it happens, it's something that would take some time. And then if you read between the lines of things that we're saying, there were things like, we're not selling the Bitcoin that we already have. That's something that's different. But in terms of actually building reserves, like you see some countries, many countries, using gold in that aspect, I think it has more complexity. And I don't think most of the countries are ready for that yet. So we'll probably maybe see smaller countries doing that before we see bigger countries. Of course, when we saw El Salvador starting to do that, some people naively thought, oh, okay, now this is going to spread out. But then, El Salvador is super, super small. But we might see medium-sized countries. There's always speculation around the things that are not, super seen, and Middle Eastern countries and things like that, and indirectly having holdings like this. So not something that you would see in a normal balance sheet, sort of say. There are different ways that you probably expect some big players, including potential, sovereign, being exposed already. But by the very nature of how these, funds and institutions work, you don't have a lot of transparency to understand what's happening. I think the mere fact that this is being discussed is a super positive sign, and once it becomes normalized, then a few years after that, you can probably expect to see some things, and not pulling what Germany did, which is actually selling without the need to sell. If you're holding a big bag, you can hold it and more comfortably if there's consensus around, this asset is okay to store, right? So yeah, I wouldn't expect this to change in, a year after the election, even if Trump's elected. A year or two, I think it would take more time.
Geoff, I don't know if you have anything to a different opinion. Feel free to share that, but I did, in the few minutes we have remaining, want to just ask you both one kind of final question. And Geoff, I'll let you go first, but if there's anything we haven't really covered that you all feel that investors should be paying attention to in this space, there's obviously a tremendous amount going on, and tokenization and things like that. Is there anything that going into the fourth quarter here, the elections, all these other things we've discussed into the new year, anything that investors should be kind of keeping a close eye on in this space?
Yes, I mean, obviously we've touched on the main ones. I suspect the chance of some sort of killer app or killer use case for smart contract platforms like Ethereum may come soon. So there's been a lot of chat recently around stablecoins. So for those that don't know, the pickup in stablecoin volumes in the last 12 months or so has been huge. That traditionally was there to allow on and off ramps for fiat users to then get into crypto assets, right? So, but now it's much more the case of in emerging markets, people using stable coins to get money across borders. It's building up to a case of FX markets being able to do T+0. So there's like real world use cases that are coming on stable coins, which is, let's say, not the sexiest topic within digital assets given the stable nature, but a real world use case of dramatic scale, I think, is coming. And looking at what stablecoins are doing, I think is perhaps the most likely for the next 6 to 12 months. And that can legitimize a number of the use cases we've been waiting for a lot of years around DeFi in particular. So something like that, I suspect, sort of then says actually smart contracts and DeFi and what that whole ecosystem means is huge. So it's an in the background, very, very slow bleed story, which I think a lot of people have missed.
Bruno, I'll let you close with the same question. Anything we haven't covered that you think investors should be paying attention to?
No, I think that's the usual things that we say. It's this is an asset class that has merit, portfolio merit. Everyone should pay attention to it. Filter out the noise. In the end, if you take a webinar like this 3 years ago, we would be speaking around different the subjects of the time, and thinking some things were existential or not. But crypto is on its march and still doing its thing, and I think that's the most important factor that we have. And when we talk to larger investors who have been hesitant in the past to come into the asset class, the fact that you're seeing the same investor for 5-6 years and saying, remember what I told you in 2019, 2020, 2021, like it's still here. And I think especially with the US ETFs, this is something that really some people finally understood. The big factor that's there, and the one that I sometimes bring up and that I think about and where I pay attention to as a crypto investor is in the other projects, taking out Bitcoin and ETH, but even ETH, I think to some extent, given that although we're seeing a lot of progress on tokenization and some things maybe being ready for prime time, in the medium term, we still don't have the killer apps in crypto, perhaps beyond stable coins and Bitcoin and a couple of other things you can say are really good and really interesting. And this is something that the industry, the projects, they really need to deliver, right? So when you think about how your strategy is doing, let's say, we have a few thematic ETPs, ETFs. If you're considering something between a layer 1 ETF and the DeFi ETF, for you to choose that allocation, there is some knowledge, there's some dig deeping you have to do to say, is this, I think, the winning horse, or the horse that's going to do a little bit better in terms of sectors within the industry, right? And what I really hope for and expect for the next 2-3 years in particular is that some of these projects will start delivering killer solutions. I think that's what everybody that's involved in more day-to-day business and not just looking at price action expects. And for crypto Web3 or whatever you want to name it, delivers on its promise of decentralization, everything that comes with that, because it's something the world really needs, especially given the times that we're in.
Well said. And Geoff, thank you for joining us. If any folks that are listening now haven't checked out the Rise of the Phoenix research paper, I think it came out last week. It's a great analysis of the current state of Bitcoin in particular. And Bruno, thanks as always. Thanks everyone for joining us, and look forward to having more discussions on this very soon.
Right.
Take care, everyone.
Guys, thanks.
Thanks all.
Thanks, everybody.